Hello Business Math students. Today we're going to go over Chapter 6 review sheet for sections 6-1 through 6-4. You will not need any tables for the review sheet or your test. It's all included on the sheet for you, so you don't need to worry about that. We're going to go over the 5 questions together. I'll give you some hints towards what to look for on the test also as you're going through this. The test looks similar or almost the same as this review sheet. So make sure that you understand all the questions on the review sheet. And don't forget, if you do have questions and I haven't answered them, either reach out to Ms. Field or myself and we'll give you more of an explanation. Okay, let's get started. Question number 1. Luann is buying a home for $167,000. She will make a 10% down payment and borrow the balance for 30 years at 8.23%. Her monthly mortgage payment will be $1,127.04. What total amount of interest will she pay over the 30 years? All right, so the first thing we need to figure out is how much did she pay using these payments for over the 30 years. So she has a 30-year mortgage. So let's put question number 1. 30-year mortgage. She pays 12 payments a year, so we're going to times it by 12. We're going to times that by the amount she pays per month, which is $27.04. So her total payments over the 30 years is $405,734.40. This is her total payments. All right, we're going to need that information later. Our goal is to find how much interest she paid over the 30 years. This is how much she made in total. Not all of this is interest, so we got to figure that out. When she bought the home, her purchase price was $167,000, but she did pay 10% down. So we got to figure out how much she made of that for a down payment. So $167,000. We're going to figure out 10% of that because that was her down payment. So times 0.10. 10%, we move it over 2 places, gives us 0.10, which is $16,700. That was her down payment. So out of the $167,000, she paid down $16,700. The difference is how much she borrowed from the bank. So we need to figure out the difference. So the difference between there is $150,300. So that's how much she borrowed. She borrowed this. She paid them a total of $405,734.40. The difference between this, because she had to pay this back, is the interest. So we're going to find the interest. $405,734.40 minus the $150,300. So her interest over this 30 years was $255,434.40. This is the interest. Notice on this question, we did not use the 8.23%. That is extra information. Same thing on your tests. you'll get an extra piece of information. It's already, that 8.23% is already wrapped into this monthly payment. So they didn't need to tell you that. Okay, so be careful with that on your test question number 1. Question number 2, moving on. So question number 2 says, Mary plans to buy a home. She estimates her annual home ownership expenses to be mortgage interest, $4,873, property taxes, $2,156, home insurance, $418, depreciation, $1,800, utilities, $1,835, maintenance and repairs, $825. She will lose $1,410 in interest on her down payment. She will save $640 in income taxes. What will Mary's net cost of owning the home in the first year? So we're going to figure out all of her expenses. We're going to add all the expenses up, and then we're going to subtract from that savings and income tax. All right, so let's get started. Question number 2. So the first thing, an expense is our mortgage interest, or $4,873. Next thing is an expense is her property tax, $2,156. Next expense is home insurance, $418. Depreciation, $1,800. Utilities, $1,835. Maintenance and repairs, $825. Let's put repairs. And finally, she loses $1,410 in interest on her down payment. We're going to add up all these expenses. Once you've added them all up, we need to take away from that the $640 that she gets back from her income taxes. That's a savings. To get a total or net cost of $12,677 is her net cost. Remember, this is on buying the home. On your test tomorrow, I highly recommend that you go to that video and watch question number 2, because question number 2 is a little different than this review sheet. On question number 2 on the test, they compare. Yes, you do have to do the buying, but they also have a renting, and you have to figure out the difference between the cost of renting versus owning. So make sure that you check that out. All right. Question number 3. Question number 3 says property tax rate is $34.67 per 1,000. $34.67 per every $1,000. Find the tax rate, or find the tax due on a business whose property is assessed for $540,000. So the assessment is $540,000. We have to pay $34.67 on every thousand of that $540,000. So divide and see how many thousands are in there. I like to just cross off the zeros. It makes my life totally easier. 540 divided by 1 is just 540. You can actually put that in your calculator. You'll still get 540. Times that by how much the 34 rate is for the tax. And you will have to pay for this business $18,721. And that is our tax that's due. For this business. All right, so again, I took how much the assessed value divided by 1,000 because it's for every 1,000 you have to pay that. Found it was 540, times it by the $34.67, gives us our tax due of $18,721. Question number 4. Virgil's insured his home for $123,000 at an annual rate of 76 cents for every $100. What premium did he pay? So we're figuring out how much his insurance is for the year, and that's called his premium. Same idea as we just did with question number 3. So question number 4, it's 76 cents per every 100 this time though. So we take the amount that they insured the home for, $123,000, divide it by 100 this time. Again, I like to cross off the zeros because when I divide, that's what's going to happen. I get 1,230 divided by 1 is 1,230. Times it by the 76 cents per 100. Our premium is going to be $934.80. That would be the premium for the year. So that's the insurance on the home, just in case something happens and they need to file a claim. They insured it for $123,000. They pay this much, $934.80 a year. Question number 5. Jeremy's homeowner's policy has a face value of $56,400. So $56,400 is the most he's going to get back for his loss. And it also has a $750 deductible. How much will the insurance company pay on a $1,612 loss? The insurance company is not going to pay the entire thing. You first have to pay the deductible, then they'll pay the rest. So they had a loss of $1,612. We're going to subtract out the $750 deductible. And you will get paid by the insurance company $862. That's what the insurance is going to pay. You pay the $750, they pay $862. All right. So that's the end of this video. Make sure now that you start your Chapter 6 test, check out the video that goes along with it. Make sure you hand that in on time. And until next time, be safe and have a wonderful day.